Hello, today I'll be looking at financial summaries. We're going to be looking at the vocabulary terms used to describe financial summaries. A quick overview of the terms. We have overheads, break-even totals, variable cost, fixed cost, assets, gross, profit, retained profit, dividends, creditor, net, accounts payable, liabilities, accounts receivable, debtor, and turnover. These are the terms we will be looking at today. Let's starting with overheads. Overheads are business expenses not directly resulting from creating a product or service. Example of these are rent, utilities such as water, heating, and electricity, travel expenses, and repairs. For example, maybe I have to travel to meet a potential buyer that's not related to the product or the service that I'm creating. Or maybe I need to repair my warehouse. That is not directly a result of creating my product or service. Then we have the break-even total. The break-even total is when the total cost and the total revenue are the same. In other words, the amount of money that I spend and the amount of money that I make are the same. In other words, there is no loss or gain. My profit is zero and my profit is zero and my losses are zero. Now, variable cost, these are expenses that change in proportion to how much a company produces or sells. In other words, as production or sales go up, the costs go up, or as production or sales go down, the costs go down. Examples of this are raw materials, packaging, and some utilities. For example, imagine that I am selling more products of Coca-Cola and I am producing more products of Coca-Cola. Then because of that, I have to buy more cans, and then because of that, my packaging goes up. Okay, next are fixed costs. These are costs that do not change when sales or production increases or decreases. In other words, for example, the costs stay the same regardless of whether whether sales or production goes up or down, whether I sell more or produce more. Examples of this are rent, employee salaries, insurance, and office supplies. Maybe I have a factory and my factory is running 24 hours a day and we're producing a lot. However, I'm still paying the same amount of rent for that space my factory is taking. The next one is gross. This is gross. Gross means the total or whole amount of something. An example of that is a company with an income of 10 million and expenses of 8 million. And that company will report a gross income of 10 million. That's the whole amount of money earned. But net, on the other hand, is somewhat the opposite. Net is what remains from the whole after certain deductions are made. An example of this is if a company has revenues of 10 million and expenses of 8 million, then the company will report a net income of 2 million. That is the part that remains after subtracting expenses and production costs. The profit is the money left over when the revenue exceeds expenses. In other words, profit is, the revenue or the money that I earn minus the expenses, similar to net. Moving forward, we have dividends. Dividends is a dispensation of corporate profits to eligible shareholders. Shareholders are such as stockholders, and that's giving the money. Next is retained profit. This is the profit a company has left over after paying direct costs, indirect costs, and income taxes and dividends. Remember that the profit that a company has to be shared with its shareholders. After that profit's given to the shareholders, we have then you have the retained profit. That is the amount of money that the company actually holds for itself. We have creditors. A creditor is a person or a company that lends money to another person or company. In other words, a company that allows another company or another person to borrow money which will be repaid in the future. Examples of creditors are banks, mortgage lenders, credit card issuers, credit card unions. I might go to a bank, take out a loan for a car, but I have to pay back that loan. Then we have, on the other hand, the opposite of a creditor is a debtor, and that is a company or a person who borrows money from another company. In other words, a company or person who must pay back money that was borrowed. The turnover is how quickly a company collects cash from accounts receivable or how fast the company sells its inventory. We'll talk about accounts receivable in just a bit. Then we have accounts payable. Okay. Accounts payable, that is money that must be paid to vendors or suppliers for goods or services that were received but not yet paid for, incomplete. For example, purchases of products that are going to be paid over a period of time, purchases of equipment that are paid over a period of time, and purchases of raw materials that are paid for over a period of time. Because I'm paying for it over a period of time, that's money that I owe that company. Okay, and that's my accounts payable. The next one is accounts receivable. Okay, that is money that customers must pay your company for products or services that have been invoiced. An example of this is if a customer purchased equipment from you and they agreed to pay everything back in 6 months, then those funds, that money they owe you, fall under accounts receivable. Okay, last is assets. Assets are almost everything that is owned and controlled by a company that can be valued in money. Examples of this are vehicle, equipment, investments, and accounts receivable. Those are that money that you will get in the future. That is also assets. We have liabilities. Liabilities are legal debts a company owes, must pay for to third-party creditors. Examples of this are bank loans, taxes, credit card debt, accrued expenses, and accounts payable. So this is a quick summary of the words we were looking at. Overheads, break-even totals, variable cost, fixed cost, assets, gross profit, retained profit, dividends, creditor, net, accounts payable, liabilities, accounts receivable, debtor, and turnover. Those are the words that we just studied today. Lastly, all my references for these terms came from this glossary here on this website. It'll be in the description below for your benefit. Please have a nice evening. I hope that you enjoyed this, and I look forward to seeing you in class. If you have any thoughts, questions, or concerns, please email me. Thank you for watching.